Hi, I'm Steve Clemens, and I have some questions. How did Americans just get sucker punched with the highest rate of inflation in 40 years when no one was looking? And if your cup of coffee now costs double what it used to, what are the consequences for Joe Biden? Let's get to the bottom line. Just about everyone in America can feel the pinch. The cost of everything is rising, whether it's essentials like food or gas and rent or other things like travel and services. In 1 year alone, the Consumer Price Index that tracks inflation has gone up by 7.5%. That's the biggest hike in 40 years. While President Joe Biden hasn't caused the rising cost of living in America, he's sure going to get blamed for it. Last year, his administration called it transitory, but it turns out inflation has some legs and is going to be around with us for a while. There's no way around the fact that inflation gut punches the quality of life for many Americans, and it breeds discontent. So what should he be doing? What are the forces behind the surge in prices? And what can be done about things getting more expensive all the time? Or is this just the new normal? Today, we're talking with Jason Furman, who was the top economic advisor to the White House under President Barack Obama, serving as the chairman of the Council of Economic Advisors. He now teaches economic policy at Harvard University. Jason Furman, it's great to be with you today. I know that you understand inflation and its drivers better than anyone. But, let me just kind of put up some numbers here that we've just gotten from the U.S. Department of Labor. Food up 7.5%. Peanut butter is something Joe Manchin put out on his Twitter, up 15.5%. Gas, 40%. Electricity, 10.7%. Cars, 40%. So we have a surge in a lot of these numbers and basic staples that people are interacting with. Now, wealthy people can get by, but a lot of other people are going to be, struggling with all of this. Can you give our readers an understanding of what happened between last year and this year that has sent these prices surging to levels that we're seeing?
Yeah, Steve, we're really seeing inflation. At first, people thought it was a few specific things. Oh, this is what's happening in cars. This is what's happening with the price of something else. But as 2021 went on, those price increases broadened out and started, as you just showed in that chart, affecting everything. I'm an economist, so for me, everything is supply and demand. It's not supply or demand. In this case, the supply can't fully react, in part because of COVID. We can't make as much as we'd like. And demand is sky high because we gave households a lot of money and kept interest rates very low. And the collision of those two has meant this once-in-a-generation price increase.
Well, with President Trump, before the Biden administration came in, we already had a lot of injection of money. We also had a tax bill in 2017 that basically put a lot of money out there. So there's been a lot of money swashing around in the U.S. economy. Have we overstimulated the economy and put ourselves in a bad position?
I think we did too much. I'm glad we did a lot, though. So don't get that wrong. The U.S. economy has recovered further and faster than most other major economies in the world. We've recovered much faster than we have in previous crises. The unemployment rate is relatively low right now. So big picture, I'm happy. Fine-tune that big picture, go back in time, give people somewhat smaller checks, make the size of the whole thing a bit smaller. Probably would have done, even better than we did had we done that.
President Biden gets a little irritable when somebody talks about inflation around him. He did this with a Fox News reporter, Peter Doocy. He also did it with an NBC journalist, very famous, Lester Holt, where he basically called Lester such a wise guy on this. But is it not in the purview of the president to make policy choices that could affect the drivers of inflation? Or is this just sort of out of his, ability to operate? Because, it's hard not to pay attention to President Biden's mood going sour on this.
Yeah. First of all, I do think this is a legitimate concern that the American people have. I don't think this problem was invented by the media. I think, if anything, the media are reflecting something that families across the country think. It's tricky for the president because he doesn't have a lot of tools to bring down inflation. The agency that is the primary agency for dealing with inflation is the Federal Reserve. The president has been exactly right on them. He's treated them as independent. And he's appointed excellent people, nominated excellent people to the Fed. They need to be confirmed by the Senate. So the main thing he should be doing on inflation is putting people on the Fed and getting out of the way. And for the most part, that's what he's done. But of course, when you're president and something goes wrong, you're always going to get more blame than you deserve.
Now, some years ago, I interviewed former Federal Reserve Chairman Paul Volcker. I think you were actually there in the same conference. And at this meeting, I asked former Chairman Volcker what it was like to try and tame inflation, where the prime rate went up to 21.5%, and you had this period of time afterward that led to a big recession in 1980 to 82, and we got 10% unemployment. Is that a pathway that we're going to see coming out of this, that rates have to go up, that you're going to have a wall on to bring demand down because supply is so limited? I mean, is that one of the policy responses that you think is serious on the table? Because that would also be a shocker for a lot of people in this economy.
Yeah. The goal of the Fed is and should be to avoid exactly that problem. And that's part of why you want the Fed to do more up front, so they don't have to do a huge amount later on. I mean, some of this is phrased as the hawks want this and the doves want that. I think that's the wrong way to think about it. Anyone like myself who was calling on the Fed to move earlier and to raise rates earlier was basically saying, if you don't do this, you might be in that same position as Volcker. When he had to tackle the inflation, it had been building up for 15 years. Now it's more like 9 months. So I think this is something we can still deal with, that it won't be anything like Volcker. But if you take that attitude and use that as an excuse to do nothing, that's when it'll become like the Volcker situation.
Here in Washington, we're already seeing people trying to scramble to come up with short-term fixes. And so one of the items in the news right now is to reduce or get rid of, for some holiday, of a gas tax. I've seen you comment on this a bit. I've seen others like Senator Joe Manchin say, we're already going to, mess up the trust funds in the highway trust fund, and why mess them up more? Is there a danger of running to quick fixes that end up undermining and hurting us in ways of over-responding to inflation right now?
Yeah, I mean, gas prices are just the worst issue economically and politically, because people hate it when gas prices go up. They blame the president. And of all the prices in the economy, the one the president probably has the least influence over is gas prices. They're set in a global market. And there's just not much you can do. You always are trying to do things, release oil from the Strategic Petroleum Reserve, for example. Gas tax holiday is another one of those. Maybe it would lower prices by 12 cents. Maybe a month later, prices would have made up for all of that and be up even more. So I think it's something that sounds good when you propose it. If you actually did it, probably wouldn't be received that well. I hope they don't do it, but I get that they're under tremendous political pressure through no fault of their own for the global oil price.
I know that these problems are very complex, and I read you and I know that. I'm going to ask a simple-minded question, though, in this, because it's something that's been lurking, and this may be a naive one on my part. But after watching a lot of the hostility towards immigration in the last administration, and seeing, the American population growth at its lowest level, in a number of generations, you kind of wonder, on one hand, is there a combination of folks not coming into America through immigration, however they may come into the nation, and also looking at some of the trade brinksmanship that we've had, where America's come out of the Trans-Pacific Partnership deal, that we have had a brinksmanship with China. So maybe some of those goods that were coming in that were perhaps undervalued, or at least valued more cheaply than you could make in the American economy. Is the combination of those factors having any impact on the costs we're seeing in the surge in prices and inflation in the United States?
Yeah, Steve, I think both immigration and trade are two things that we should be more open about. I would have thought that regardless of what the inflation rate was. I think that addressing both of them would help to some degree with the inflation as well. I look at the president, and he's done a wide range of policies on the supply side related to ports and microchips and all sorts of things. Pretty much the two levers he hasn't pulled that I think he could are trade and immigration. I don't think they'd make a huge quantitative difference on inflation, but they'd help, and they're worth doing along with everything else he's doing.
I mean, trade is one of the areas where I haven't heard much from the Biden administration, just as you said. And just this week, the president just released a new strategy for the Indo-Pacific. And trade is mentioned in there a few times. But when you kind of look at that and compare it to what the Obama administration was doing with the Trans-Pacific Partnership, and you ask yourself, okay, how is America going to lead more or benefit more than it did during that highly complex negotiated deal. Is there something missing in the Biden economic plan in terms of global economic engagement that we need to see if he's really going to begin addressing not only the economic health of this country, but also to lead in the rest of the world?
Yeah, Steve, I'm always for more free trade, not less. The truth is, it's not a huge difference for the U.S. economy right now. TPP would have been a very good thing. I was for it. It would have done a lot more for growth had the United States joined it for Vietnam and Malaysia than it would for the United States. Be a small positive for us, but only a small one because we're already pretty open to trade. So I think at this stage, when you look at something like TPP, I'd ask a bunch of geopolitical questions that you're far better equipped to answer than I would. What does it do for the United States vis-a-vis China, for other countries vis-a-vis China? I think there probably is a strong geopolitical argument for it. And there's a decent economic argument, but not so huge that, I find myself pulling my hair out if no one listens to me about it.
What do you think about the other side of this? Because when President Biden has been asked about inflation, his natural deflection is to semiconductors. And so we've heard about an Intel plant to put in a $20 billion production facility into Ohio. That's going to take a long time. You can't invent that overnight. But he's talked about semiconductors as being a driver of the price of cars. But it just seems simple to me. Can you tell us where the president is right with that explanation and what the limits of that explanation are?
Yeah, semiconductors, just this phenomenal shortage that's emerged. It spreads itself throughout the economy, especially in cars. Cars have disproportionately contributed to inflation, so the president's absolutely right about that. The main solution to it, though, is the law of supply and demand. The microchips go up in price, more businesses come in to make them, and maybe the policy response is helping speed that a little bit, but I can't imagine it's helping speed it that much. So, it's sort of yet another case where, yes, that's the problem. Not every problem has a solution. In the case of semiconductors, the solution is mostly patience and letting the market work its magic.
Well, one of the things about the market, I was thinking about this show and if I were to, want to go out and buy a car, and you're kind of looking at, should I buy it now? Should I buy it in the future? Used car prices are surging like crazy. The value of my used car is high. But, you raise the question, if Jason Furman was going to go out and buy a car now for $30,000 this year, but, it might go up to $40,000. And if you made a rational economic choice and say, okay, I'm going to buy it sooner because inflation is going to drive those numbers higher, then aren't you exacerbating the problem? How do you get out of this escalatory cycle of more and more demand? Because people fear if they don't get it now, then the absolute cost will go up and the value of everything diminishes. I'm just sort of interested in how you get out of that cycle.
Yeah, there's not a clear-cut answer to that question. Inflation expectations matter a lot. They affect, are you going to buy something now or wait 6 months? That depends on your inflation expectations. What wage are you going to negotiate? Depends on your inflation expectations. Does a business raise its prices or not? It depends on its inflation expectations. The problem is this thing is really important, inflation expectations, but we don't know very well how it's set, how it changes, or how to influence it. I'd like to think that the Fed, by talking more seriously about the problems with inflation, its commitment to tackling inflation, the steps it's taking to deal with inflation, will also bring down inflation expectations and change some of that consumer behavior around gaming the timing of inflation and the like. But, we just don't know exactly, once these expectations start to rise, how you get that genie back in the bottle. And the hope is that you can get it back there without causing a recession like Paul Volcker did.
I talked to a couple of senators recently. I won't name them. They both voted in favor of the renomination of Jerome Powell as chairman of the Federal Reserve Board. But at the time, they talked to him a lot about the Fed's role in the economy, buying bonds and, the need to begin tapering that and bring it down. And I just saw them the other evening, and they were very upset that in their view, and I don't know if it's accurate, the Fed has not been tapering off, has not been coming out of the economy. So it raises this question that I'd like to ask you is, what blind spots and what mistakes is the Fed making right now in this, in your view, or is it managing the portfolio of the U.S. economy as well as it can? How would Jason Furman counsel the Fed to begin dealing with some of these questions where people begin to feel like this is a rigged economy and not one where the market is working as well as it could?
Yeah. So, Steve, last year the Fed was way behind the curve. It was constantly saying the inflation is about to go away. It's not a problem, implying that it didn't need to do very much. It's changed dramatically in the last several months. The expectations the market has for what the Fed is going to do has changed dramatically. They're identifying inflation as the number one problem that they're dealing with. They're talking about using their tools, and we're going to start to see them using their tools. It's trickier to know how much they should use them. If you go too far, you can cause a counter reaction. They've already tilted pretty far. I think they can tilt still further, but it's okay also to let the pressure build up, the expectations travel along with them. You don't want to wake up one day and make a really, really dramatic move. So they're in a better place now. I think they're going to still need to keep pushing themselves into that place of higher interest rates and letting the portfolio wind down, possibly even selling some of it.
Another area that has come under scrutiny, in part because of COVID, but because of the economic behaviors we've seen, we've all had to learn a little bit about the global supply chain. We can't get certain components we need or lights or, address certain things because of the global supply chain breakdown we've seen. I'd be interested in your thoughts on that and whether that's an appropriate and effective way to begin thinking about supply chain issues in the future, or whether that's folly because it's very hard to get the circumstances to work in a market economy like ours.
Yeah, I'm closer to the folly view on that question. I think global supply chains in the year after COVID hit held up pretty well. There were issues with PPE, there were issues with ventilators, but for the vast, vast majority of the products we all use, just the worst possible thing could imagine to the global economy, and yet the shelves were basically stocked. You could buy almost everything that you wanted to buy. This year, it's been a little bit choppier, but even this year, for most durable goods, there are more of them being produced than ever before. There are more of them being consumed than ever before. And so for most of them, the problem isn't that there's been some supply chain that froze up. It's that we wanted to spend, I'm making this up, 20% more, and we could only buy 10% more. Now, cars are a big and very notable exception to all of that. Car production is lower. Number of cars purchased is down. But outside of that important exception, a lot of what we're seeing is actually supply has not increased as much as we wanted it to.
Well, let me ask you a question about this, because I think if you go out and interview folks outside, just around America, they see prices surging. They don't know who to blame. They may blame the White House. They may blame companies. I know a friend who's a regular, everyday buyer at Starbucks, and this friend is furious because he said, basically a year ago it cost like $5 for a muffin and a coffee, and now it's gone up to $8.25. So that's a pretty big surge. And is this a function of companies, in your view, that are meeting the price that people will pay? Is it corporate greed? Are there things that companies are doing, could be doing, to not raise prices as quickly? I don't want to get into price fixing, but how about price restraint, self-restraint?
Right. So first of all, I want to be clear. There is too little competition in the U.S. economy. We need more vigorous and active antitrust. I don't think that problem is closely related to the inflation problem we've been talking about, but there are a number of markets where it is a problem. In general, though, whether companies are always trying to maximize their profits. They were trying to do that in 2019. They're trying to do that now. You give people more money, and companies are going to both raise quantities and raise prices. They're going to do that whether they're monopolies or, engaged in heavy competition.
Well, you know how to be a smart economic advisor in a political system. And I know that you do not have to send your thoughts into President Biden and get, counted for them one way or another. But it does raise the interesting question of what does the president do in this situation? You're facing an election, a midterm election this November. It was already going to be tough for the Democrats. You have a lot of discontent. I mean, inflation has become one of the top issues of concern for Americans today, more than Russia, Ukraine, more than a lot of the other things going on. This is a big deal. What are the choices that he has in this political season of responding in a way that would be compelling in your view?
Yeah, I don't know the exact answer to that. Part of it is message. I'm doing what I can. It's gonna, it might be bad before it gets better. I understand it's a legitimate problem for you, so not being out of touch. Part of it is getting the policy right, which is mostly about appointing good people to the Fed. That's nominating good people for the Fed. That's what he's done already. Part of it is making sure he doesn't get distracted, that he not just you can't wake up every day and fight inflation. There's not a day's worth of activities every day for the president to do on that. He needs to spend his time on other things like getting child tax credits for American families, dealing with climate change, and all the other things that he was elected to deal with. Now, I don't think any of that fully solves the discontent. I think the only thing that solves the discontent is inflation being lower. And the only thing that's going to make inflation lower is a combination of time and the Federal Reserve.
You wrote a piece, Jason, about why so many mainstream economists did not see inflation coming. Has there been any kind of revision in the profession by many of your colleagues on how to kind of tool up for the next time so that there's better anticipatory predictions when it comes to something like this?
Yeah. I think the issue here was our models were basically telling us this was going to happen, but they were saying such crazy things that people didn't want to believe them. So they almost turned the models off and said, we don't believe this. We're going to add a fudge factor in. So the biggest lesson to me isn't that economics went wrong. It's to take your economics seriously and to never devalue that when you have powerful tools and use them, like fiscal stimulus and monetary stimulus, they actually can make a very big difference. There's a broader lesson which goes beyond economics, which is it's never a great idea to silence dissenting voices, shout them down, and accuse them of being idiots. Maybe they're right. Take them seriously. Let's not have an echo chamber where everyone thinks the same thing. Let's be uncertain, debate, and have a proliferation of voices. You're always going to get a better answer if you do that than the alternative.
So when do you think I'm going to be less frustrated with the price of Jif peanut butter, which is surging? I happen to be, a great fan of Jif peanut butter, which is surging crazy levels.
Well, first of all, see if I could suggest that you switch over to ice cream. Those prices have actually been falling lately. I think it's the only thing where prices are falling. If that doesn't work for you, I don't know. Maybe wait a year.
Well, we'll leave it there. Jason Furman, former top economic advisor to the White House and now professor of the practice of economic policy at Harvard University. Thanks so much. It was a great conversation on inflation, everything you needed or wanted to know. Thanks, Jason.
Thank you.
So what's the bottom line? The good news is that there are some jobs out there, and some even pay well. But guess what? Inflation will eat your higher wages. Quick fixes are just hard to find. The wealthy won't have a problem, but the vast majority of Americans are going to have to scramble harder than ever to pay their bills, fill their cars with gas, pay their rent, buy their medicine, and just pay more to survive and keep their heads above water. When the American standard of living takes a big hit, folks become really unhappy. And unhappy voters punish the party in power, which is the Democrats. They should be bracing for a very tough election battle this year, especially if things go from bad to worse, which I think they probably will. And that's the bottom line.